about what you should do if you believe stagflation is a reality or is possible or probable, because there are some things that I would highly recommend if we go through a stagflation environment. Let's talk about the week ahead. Let's just talk about how important Wednesday is, because we will have a Fed rate decision, which again, doesn't mean anything, but the Fed and Jerome Powell talking and taking Q&A, that is where the fireworks may happen. So let's jump into it, folks. Let's jump into the week ahead. There's a lot of stuff going on the economic front that we should be paying attention to, and that starts tomorrow, Tuesday. Tuesday, Case-Shiller. Again, always remember that Case-Shiller is a lagging indicator. We are going to get a Case-Shiller report tomorrow for February. Yes, folks, we are almost in May, and we will get Case-Shiller data for February. Just so you know, last report from Case-Shiller, home prices were up 6.6%. On Tuesday, probably more important in my opinion, because let's just be clear. With rates at 7.5 today, we should not care about what home prices did in February. It was a different interest rate environment. But needless to say, Case-Shiller tomorrow. Consumer confidence. Consumer confidence is key. Consumer confidence on Tuesday is key. Why? Well, as you know by now, the consumer drives the economy. It is also clear that we are starting to see a bifurcated consumer, where the upper income, fighting off a sneeze, where the upper income is still spending and the lower income is not. So what is going on with consumer confidence? Then we start getting jobs. This is jobs week. Woo, fighting off a sneeze. Jobs ADP report. ADP report always comes first. Last month was 184,000, again, private sector, expecting 200K. So again, we've been at this 200,000 job creation numbers for quite a while now. Will we have a big beat? Will it not? What is behind the data? What is it? Part-time, full-time? What's going on with wages? A lot of this week will be jobs. We will also get the JOLTS report. What is that? That is basically job openings. Again, if you look back historically, we did peak out at over 10 million job openings, or something like 1.4 job openings for every unemployed person. What will be going on with jobs report? I think last month and the month before we went below 9 million. I think the last number was right around 8.8 million. So where are we going? And then of course, Wednesday, it is Fed Day. We are going to get a rate decision. They're doing nothing. Just, it almost is irrelevant. They're not going to raise, not going to cut. Then there will be the press announcement. The press announcement could have something in it, but I doubt it. What I mean, what could it have? It could talk about inflation being hotter than trend or hotter than expected, maybe. The press announcement could lean hawkish, right? That's what I expect. I expect the announcement to lean hawkish. But then we get Jerome Powell in front of a microphone, and that's where the fireworks might start. Will Jerome Powell talk about no cuts? He probably has to, right? He probably has to. The big question, will he talk about raising rates? He probably should, right? If you've been watching my channel for any length of time, you know that I've been begging the Fed to talk about raising rates. Again, I don't think they have to, but I do think they should talk about it. They need that threat. They need that big bat to say, we are here. Not only are we comfortable at 5.25 to 5.5, we will go higher if the job requires it. I believe this meeting is the one they need to do it. They can't miss this opportunity. So will the Fed do it? Will Jerome Powell? Will, frankly, the press? The press needs to ask questions. They need to ask questions. Will we go higher? Following on that, we will also, on Thursday, get the weekly jobless claims. Again, we are trending below 225. I think last week was 210. This is the weekly number that you and I should be paying attention to. It will be the first indication that the job market is cracking. And then on Friday, we start to get Fed speeches. Yes, folks, by Friday we will have 2 scheduled Fed speeches, so it will be very interesting. Will Fed members talk about raising rates? Remember, Michelle Bowman was celebrated on this channel because she was the first president to say we may need to go higher. We need another one. We need the threat that they can go higher. So if Jerome Powell doesn't do it Wednesday, we will see what happens on Friday. And then, of course, Friday's jobs report last month was 303,000. Again, kind of a dirty number because a lot of that, if not all of it, was part-time. Expectations are 250,000. Will we go higher? Will we go lower? Also important to note that last month, 3.8% was the unemployment rate. That is expected to continue at 3.8%. All righty, folks, let's talk about stagflation. Stagflation, again, is a horrible outcome for the Fed. It is a horrible outcome for the U.S. economy. I do not mean it. That cannot be understated. It is a world of high inflation, low growth. The tools that the Fed has cannot fight that. That said, what do you and I do as investors? Well, in my opinion, you have to look at the landscape of what happens in stagflation. Number one, you should be prepared for rates to stay high. What does high mean? Kind of where we are now. 5% 10-year treasury, 7.5%, 8% mortgage rates, okay? You need to understand that is the baseline. Now, if that is the baseline, what do you do as an investor? Folks, this is where you and I, as One Rental at a Time fans, do the work. This is where you and I look at days on market. This is where you and I find motivated sellers. This is where you and I create wealth. Because what's going to happen in stagflation? Very simple. Our competition will disappear. I have been in this environment before. When the competition disappears, you and I could build generational wealth. Yes, generational wealth at 8% mortgage rates. How can that be? Well, it's because we're disciplined. We follow up. We only do great deals. And we only do great deals with 30-year fixed rate money. Trust me, if you can get cash flow at 8% and you can hold forever, I am willing to bet that sometime in the future, rates will go below 8%. Now, in a stagflation environment that could run for years, that might be 2027, 2028. Who cares? You and I will do the work, write lots of offers. We will get in communities with others doing that, so we will support each other. This environment will not be fun. I am not here to tell you that a stagflation environment is a fun environment, but it is an environment where competition disappears. And if you are truly an investor and you do the work and you are patient and you follow up, you will find your motivated sellers. You will find your seller financing deals. It will be an environment where you can get creative. You can structure long-term debt to get cash flow. And then you just wait. That is the recipe. And again, I'm obviously talking about real estate. I believe the same thing applies for any asset, specifically any asset backed by debt. Only do great deals. Only do deals that are financed long-term, fixed. Don't get adjustable rate mortgages. Don't do 2-year balloons. Don't do anything that could force you to become a motivated seller. Not okay. Yesterday, folks, I talked about PCE in my opening, and I failed to talk about it during the actual broadcast. My mistake. So PCE on Friday came in a little hotter than expected, but not as bad as the GDP report made it sound on Thursday. Again, the GDP report, if you don't remember, came in low growth and high inflation. At the end of the day, the Fed is in a tough spot. We're going to hear more Wednesday again. I can't tell you how much I am hoping that Jerome Powell and the Fed says we may go higher. I want the threat I don't think they actually have to. Another thing that I don't know if you've noticed, but I've just recorded and plan to record a lot more of a new series. I am rolling out a new series and I need your help. Please leave comments below. I'm creating a new series called Ask a Millionaire. So I want to know, what questions do you have for Ask for Millionaires? The thing that I'm trying to do is I'm trying to have questions that are yes, no, and then we dive in and explain. So if you've ever wanted to ask a millionaire or you want to have fun with some of the millionaires on this channel, please let me know in the comments below, what questions do you have? I will go ahead and tee those up. So again, Ask the Millionaire coming to this channel. I think we rolled out 2 yesterday. One with Jason Pritchard that I thought was a lot of fun. So again, another one with Matt, I believe. We did get some earnings today. We got Domino's Pizza. Domino's Pizza, again, a pandemic darling. They actually beat top line, beat bottom line, and actually had 5.6% sales growth. Same store sales. So again, people are still eating out. People are still doing that. I want to talk about some housing data, which I thought was pretty interesting. How about the top 3 markets with price cuts? That might be good to know. Number 3, Indianapolis, Indiana. 43% of listings have had a price cut, had at least one price cut. Number 2, Tampa, Florida, with 44% of listings having a price cut. And then number 1, we have Sarasota, Florida. Sarasota, Florida, 48% of listings have had a price cut. Okay, great, Michael, what should I do with that data? Well, it's really simple. Let's say I was trying to buy in Sarasota, Florida, and I know that 48% of listings had a price cut. Guess what I would do? I would start to understand days on market. I would start to understand which houses fit my buy box, and I would write a lot of disrespectful offers. Trust me, in that pool of price cuts, there are a handful of truly motivated sellers, and it would be my job to find them. That's what I would do. How about this? Completely the opposite. What 3 markets had the highest home appreciation in the last 12 months? Some of these numbers are bonkers. It's crazy. Number 3, Greensboro, North Carolina, coming in at 17.8%. Wow. Number 2, Madison, Wisconsin. If I had 100 guesses, I don't think I would have guessed Madison, Wisconsin for the hotbed of appreciation, up 18.7%. And then number 1, I hope all of you are investing here. Jersey City, New Jersey. This number is crazy, 26.5%. Jersey City, if you owned a home for 12 months, the average appreciation was $157,000. I hope you owned 4 homes in Jersey City. Yeah, 26%. That is pretty nuts. Alrighty, folks. One more thing from Resi Club, and then we will close with a Dion quote. Resi Club, remember we've talked about effective mortgage rates. Remember, what is an effective mortgage rate? Effective mortgage rate is taking all of the mortgages in existence, residential, and getting the average spread. That is the effective mortgage rate. The effective mortgage rate, I think, bottomed at 3.7%. It is now 4%. How can that be? Well, simply, we are writing more and more mortgages at 7.5%. So as time goes by, the effective mortgage rate will change. Now that's a national number. If you go to Resi Club, they have a map of all 50 states, and they talk about the effective mortgage rates by state. And what I noticed was pretty wild. In California, the effective mortgage rate is 3.7%. West Virginia, 4.4%. How can that be? Well, I think there are 2 things that explain how West Virginia could have a 4.4% effective rate, and California could have 3.7. Number one, price point. Price point. Again, price points in California are obviously a little higher than West Virginia. I don't think that is shocking to anyone. But when you look at California, you also have a lot of people that are likely paying cash. So again, if you pay cash, you don't have a mortgage rate. So the percentage of loans getting done is not being skewed higher because, again, less transactions and then more cash purchases. My guess is West Virginia. I don't know this for sure. Never shopped there, so this is not meant to be mean. It's just what I believe to be true. I believe West Virginia probably has an average or median home price that is in the bottom 10% of all 50, meaning it's a cheap place to buy homes. That's just a guess. But again, if you have more and more first-time home buyers getting into the market, that means more and more mortgages, and you just pull the effective mortgage rate higher. At the end of the day, lower price points, more transactions pulls it up. Higher price points, less transactions keeps it lower. So folks, let's close with one of our millionaires quote that I saw actually on Facebook. This is from Dion from Dion Talk. I didn't retire to do nothing. I retired to do anything. I didn't retire to do nothing. I retired to do anything. And then folks, don't forget, don't sleep on this. This disappears in 2 days. Lots of you, I mean dozens of you, have said you wanted this t-shirt. You want to celebrate being part of the 50,000. You have 2 days left to get it. It will disappear June 1st. It will be gone. If you want to wear this, you want to have this, you want to say you were part of the first 50,000, that is the shirt. You need to get it. It is available for 2 more days, I think. And then we will announce a brand new shirt on June 1st. So folks, a lot of you asked for it. I've now given it to you. You've got 2 days left to get it. You can find it on my website, onerentalatatime.com. I hope you get it there. All right, folks, take care. Have an amazing day. Later.